What's up, everybody? Welcome to the goddamn show. This right here is going to be my first video when it comes to options, stock market, technical analysis, so on and so forth. I'll probably start doing a series, just educational only, to try to help some people. Okay, it is a live thing. This is Alibaba today, right now. But we're going to get into. We're not going to do any analysis today. I'm not going to try to confuse you. We're going to just strictly talk about options. Okay, I've gotten a few questions about it. Friends, family asking me about it. Most of them understand the stock market. They understand investing their money. They understand, making an investment, making profit, and retirement and things like that. Options are more aggressive, more risk, but great way to maximize profit on a certain underlying stock that is moving in the direction that you believe by a said date. Okay, there's only 4 options. You can make all kinds of different strategies, and people are out there can confuse you with neutral strategies, straddles, strangles, iron condors, spreads, all that shit. This, at the end of the day, it's broke down into 4 different types of options, 4 different types of legs, or as they're called. So, calls and puts. That's it. You can buy a call, buy a put, sell a call, sell a put. Long a call, long a put, short a call, short a put. That's it. If you were long, that means you were buying. You're taking out a debit, okay? You were buying that contract. Every single contract, no matter what you mess with, it don't matter if we're messing with Alibaba or Disney, it doesn't matter. Each of them are are a contract with 100 shares, okay, of said stock, right? Whatever it is, 100 shares. So I personally, and a lot of people, having 100 shares of any stock and then playing with it with options is kind of a, people use it to hedge when they do spreads, but I'm not going to get into that too much. It's kind of, I don't want to use the word counterproductive, because I know a lot of people that make money off of it. Basically, you have to have the shares. If you're selling them, you have to have the shares available, right? So you have to have 100 shares of Alibaba, 100 shares of Disney, 100 shares of Amazon to have that contract expire and not lose your ass, okay? So I mainly deal with buying options, long options, okay? If I'm bullish, I'm buying a call. If I'm bearish, I'm buying a put. I have used spreads, and I do use spreads to hedge my positions, or, for neutral positions, I use different things, but I will kind of use some selling or some short plays, but I will mainly day trade, buying options for bullish, buying calls if I'm bullish, and buying puts if I'm bearish. All right. It can be at times very frustrating, and it can be very rewarding. The problem is just time learning it. Okay. I recommend anybody in this video, you will want to jump in and trade money, or if you know me, I got some people I text and message here and there about some plays that I'm doing. I am not a licensed financial advisor. I have not taken any of my series tests. I just know what I know strictly from 6 years of hard studying, and learning this over time. Okay, I paper traded, practice traded for about 3 years, little bit of real money trading, and I lost. I'll say that right now. I lost. Not a lot of money, but I lost. Okay? I wanted to practice. Most traders are going to not make a profit. I think 1.6% was the last thing. 1.6% of traders will profit in their first 5 years of trading. I happened to start profiting on my 4th year. Okay? And I have since. So I'm not going to share my strategy, because again, I'm not licensed to do any of this. I cannot tell you what to invest in, what to trade, but I'm here to just simply teach, humbly try to teach, and make it simple, which was such a hard thing to find online when I was trying to learn. Okay. So like I said, let me get back into options now that I've given you kind of the background of what, or how I got here. Okay. So today I'm just going to show you really 2 directions. All right, of how we can do this: buying a call, buying a put. The buyer of the options contract, you're going to take a debit, so you're going to sell. You're going to whatever this right here, this option right here, just glancing at it, it says 37.65. Like I said, it's 100 shares. That is $3,765 right there. Okay. That is the price that you're going to pay, and you're either going to make money or you're going to lose money. When it's a lot of confusion, but the best way to think about it, there's really two examples that I like to use. The options are stocks themselves. Think of them as stocks themselves. Their value is always going to be changing. It's going to go up or it's going to go down. Okay. The second example that I like using is a pizza, like a pizza, a coupon. Okay. $25 pizza. Let me just make it easy. $20 pizza. I have a coupon for 10. If you come along and say, hey man, I want that coupon, but I'll give you $11. If I got the coupon at $10, let's say you had to buy the coupon. I know that's not how it works, but let's say you bought the coupon at $10. He is going to buy it at 11, thinking that it's going to be worth 20. Okay, if that changes. Anyways, that's the best ways to think of options. So now I've opened up the option chain here on Alibaba. This is a live trade. I'm not going to do it, but this is kind of what I was looking at when I thought about making this video. So I'm just going to stick with it. So each option has a expiration and expiration. Okay. When they expire, they're going to expire in the money, they're going to be out of the money, or they're going to be out of the money and be worthless. All right. So our first example is we're going to be bullish. All right. We're going to be bullish. We're going to expect this option or this stock to go up. Right. So now we got to pick our strike. All right. That's this number right here. Well, it wouldn't make much sense because they're already in the money and they're very, very expensive to pick like 160 strike. Okay. Because that's way down here. Let me back up. That's way down here or something, right? We're way above that. So it's going to be expensive. Look here. $4,705. Okay. But what a lot of people do, especially in day trading, is they like to play right at the money or slightly out of the money. The more out of the money you go, let's say we do a 225 strike. Okay, that's way up there. It's cheaper, $271. Okay. So what a lot of people do is they try to play the movement towards that price. Okay. Now, this could do it. It could not. Again, this is not financial advice. Just real quick, I have seen a inverse head and shoulders basically on this stock. So if I wanted to play that, I would look to buy a call, right? So one that I would look at is, okay, we could go back to this intraday top right here, which is 207. 205 will probably be in the money. I'll do a 205 for $900, okay? Or 905, whatever it executes at. And when it gets there, we'll try to leave that up and see if it changes. I don't know if Baba's going to pick up any volume right now and try to change that price, but we'll watch it for a minute. So at expiration, that means at 205, if we're at 205 or north of it, it's in the money, okay? If we're moving towards it and we're nowhere close to this expiration, it's going to gain money. It's going to gain a profit. You're going to have a return on it, okay? If it starts moving against you, you're going to lose your money. Again, this is buying a call, long call, bullish play, right? Now, I'm going to flip it on its head, okay? That is a bullish play. A long put, other one I mess with a lot, is a bearish play. You want the stock to go down. So if I was to zoom back out and try to find like an example, I guess I could stay here actually. So let's say we were up here. We saw our EMA cross right here. I love doing these intraday. So we saw our EMA cross right here. Some other things told us, okay, we want to be bearish on the day. We want it to go down. Okay, we also have a little gap here we want it to probably fill. So that price is 205. We can go ahead and get that one. It'll be in the money and it's going to make more money. When it's in the money and moving and it keeps going, it exponentially makes more, okay? So, but let's just say we wanted something a little cheaper. We wanted to go out of the money. So we'd go to 200, right? A 200 put when it was up here. A 200 put at this point in time today was probably around $700. Now it's at 1,160. So we would have bought that at the CMA cross. Okay, we would have went here, clicked it. Then you got to double click on Webull. pick our price, and place the order. Okay, so that's how a put would work. Again, the right to exercise the contract at 100 shares. We're not going to do that. We're going to play the option and then sell it to someone else when it makes a profit, or we're going to close it for a loss, right? I'm going to get into, and I want to keep this video short. It's already 11 minutes. I'm going to get into in other videos risk management, technical analysis, and different things to try to keep your head on straight and not get emotionally attached to these things because they move quick. We could click this 205 call right here for June 19th. Now let's get real close. Let's get freaky. Like, this one expires tomorrow, right? So it's like make or break. So these things are going to move quick. So a $70 call, or I'm sorry, a 205 strike up here. We're expecting it to come back here by tomorrow. That's risky, you know? That's really risky. That's less than 24 hours, right? Before it's getting close to close or exercising it. So a $70, $72, right? So if we were to click that, we would see, I mean, it's down 75% today, right? That sucks, but looks like it might reverse, and you're going to see this number. So your own option would increase, your own price. So just an example, man. I don't want to get into too much. This video is already pretty long, so I'm going to wrap it up here. That's options. You can follow our Instagram at storm_investments. Okay, I run that up. I got a small team, but I head that up. That's our Instagram. You can also follow me at Mr. Ragsdaddy on Instagram. I post some stuff there, but y'all can message me anywhere. Message me here. Comment on the video, and I can try to answer anything that I can. So I'm gonna wrap it up here. I appreciate y'all watching the video. Like I said, have any questions, hit me up. I'll catch y'all on the next one. Thank you.